Hey guys, hello. Welcome to the Crypto Lab with Alex, featured by Trading Analysis. Sorry for the today's delay. Usual stream was at 3 p.m. my time, European time, and I had some things to do, so I have to move it couple of hours forward. I hope that was not a lot of distraction for you guys. As usual, we are going to go over macro things, looking some couple of new charts. Also, we're going to discuss what is the view in regards of the Fed moving rates further, and we're going to dive into crypto, in the crypto charts and the current developments in a couple of alts. So let's start. Let's start and let's see. Let's go over a couple of things in regards of Fed. As we know, the geopolitical situation is still unsolved in a sense that we are seeing a lot of things changing, either in the world economy relations and also globally. So we are going to be in this environment, I hope, in regards of war, with not so many weeks to come. But in general, lots of relations between the trade partners and the geopolitical picture has changed almost permanently, I would say, in the at least next to 5 to 10 years. So we are going to be functioning into a new environment, and we have inflationary pressures all around, and we will have them in the months to come because this move up in many commodities and also oil and gas prices will be reflected into figures in the months to come. So we can expect even more higher figures on the inflation front. Let's start and let's see the countdown to the FOMC meeting. This is the CME tool. You can, of course, search that on the internet. This is the market anticipation of what will Fed do with the rates. You have meetings in 2022 here. Let me just glare the chart. Actually, by clicking to these dates, you will see how actually market is pricing in the possible moves for the rates. So on 4th of May, due to inflationary pressures on the upside, market is pricing in already almost 70% of certainty that the rates will go up 50 basis points. And also 15th of June has changed in the last couple of days. There are also pricing in a possibility of 65.1% that rates from this 50 basis points, where we are going to be between 75 to 1%, will go next to 125 to 150, and so on and so forth. If you go even further, the 44% hike of 100 or 1.5 to 1.75%, starting to be priced in now, very close to 50%. So most likely the Fed will be hiking on the upside. The question is only how much. Market is pricing in for almost every meeting until the end of the year. Every also meeting will be live with a press conference, which will give us a clue how the Fed is actually looking. So obviously Fed is behind the curve, and I'm going to talk a little bit about the yield curve. Yield curve is a subject of many macro analysts these days. You can also go to Trading Analysis stock and macro Wednesday stream. Our founder and a long-term trader, Todd Gordon, has explained very nicely how we can view this yield curve and in current environment. So you might also like to watch that. On the stock chart, you have this very nice dynamic yield curve instrument. So on this side, you can see yield curve with the different durations, and on this side also, on the other side, you can see the S&P. So as you move this back and forth, as you can see, you see changes here in the yield curve. So if we go from, let's say, a little bit of the end of 2006, you will notice that the yield curve is inverted almost totally. Yield curve actually inversion means that potentially the recession is very close because the shorter duration are priced in higher than the longer duration, which is a kind of a unnatural thing, and market is anticipating because the inflationary or economy is heated up. Fed will, of course, raise rates and actually try to cool off the economy. So usually 6 to 8 months after the sum of the yield curve inversion, you will see a recession. So for now, as you can see, this was at 2006, and when you go, we had, of course, a financial crisis. You will see that after a crash, the yield curve also start to look a bit normal, which goes that the shorter duration are priced in lower than the a longer one, which is a kind of a steep yield curve, which is a normal for yield curve to be. So if you go forward, you will see that this fluctuates. Bond market is pricing in the different economic influences, rates, and all of the other things, trying to see what is going to happen in the economy. And when we scroll up to the current price, as you can see, we still don't see a total inversion. As you know, we are hearing in the news for the last couple of days a couple of different duration between 2 and 10s. It was a short yield curve inversion, so they're monitoring all of this duration and their relation between themselves. But as you can see, Fed is far behind some of the levels which is needed to invert the curve. Longer duration 20 and 30 are at 2.32, so Fed is at 0.25, so it needs to go almost 2% on the upside. And actually to start to invert the curve, if you count the current raising of the rates, even for 50 basis points and then 25 and then maybe again 50, we will see, probably we will not see this yield curve completely inverted even in 2022 and maybe even first half of 2023, which is still kind of a positive economic environment in all of this turmoil. Economy in US is still standing good. The Fed is looking for adjusting the rates because of the price stability. Jobs picture is already very good, so they are trying to keep their dual mandate, but as you can see, there is a lot of hiking on the upside to invert this curve. So most likely we will see what will happen with stocks. Of course, that will affect cryptos, and that's why I'm going through all over this. We're going to monitor that for you from the next crypto labs, so we should be on the top of it in regards of the liquidity and all other stuff, how the things are going into economy, so we can see how that can potentially reflect in cryptos, because we know they're still correlated. If you look some of the correlations, the Bitcoin is very much correlated, as I'm going to show you, with SMH and of course Nvidia stock price. That's a kind of a very nice correlation. I published that for my clients, for our members in our Discord, and I will show you that correlation. It is really a very nice one. So let me just find it for you quickly so you can see. And it is here. Let me just switch the screen and show you that. So you can see here that they have a very nice correlation. In white is the Bitcoin, in blue is Nvidia stock price chart, and in orange is semiconductor ETF. And as you can see, they're following each other pretty nicely on the downside and on the upside. So I think it's a good proxy. For me, in currently, they're much better correlation than between Bitcoin and the US dollar. So we're going to monitor that, of course, in regards of these financial conditions. Let's start and let's look a chart of the 10-year yields. I cannot, of course, hold the bearish wave count, at least for this X wave. I had to transform this to be more impulsive on the upside. We have crossed some of the levels that I have been watching as a last resort in a potential wave A. Now, I have to count this more in a 5-wave move, and the next resistance levels might be around 3.10 to 3.22. This, as you can see, is the upper resistance. Are we going to go up to these levels? Yeah, maybe, or we can even retrace a little bit before, but anyhow, changing this wave count into a more aggressive 5-wave move actually gives us in some time, in a couple of months, just a small pullback in a B wave and then continuation up in the C wave, which, as you can see, will give us much higher rates in the months to come. So that kind of agrees with the heightened price of commodities, oil. So we might be in this inflationary situation for a couple of years. Depends how the geopolitics will develop in the couple of years to come. So I have changed this wave count to be more aggressive. Anyhow, in that respect, I will look for at least small pullback in this B wave and then continuation up in the C wave, which is, as I said, much more aggressive wave count on the upside that I had it before. In the European Union, this is the chart of the 10-year bond, which is equivalent of the US 10-year yield, sorry. And as you know, I was looking this support to be reached. We are there now. It happened a little bit quicker than I expected due to all of this information. If this is going to be enough to stop these yields move on the upside, I still don't know. Support zone is here. I would like to hold it, of course. I think that European Union is definitely in a different situation than Fed. If you look all of the events, I don't think that ECB will have such a kind of the open view on rates moving on the upside, and they are going to definitely have to take into account of what is going on into European economy, and also I don't think they will be able to hike rates on the upside as aggressive as the Fed is going to. I will, of course, update you on this because I would like to see the next ECB meeting and how actually the stance in this new environment will be from the ECB governing council. In my opinion, they are not going to be in a very easy position because you will have lots of inflationary pressure, and you will have also not a big possibility to follow that inflationary pressure on the upside because of the current situation economically, with people migrating from Ukraine to European Union. Also, we have higher gas and oil prices and lots of other food prices coming. Already that is reflected in some of the countries in the European Union. So I will not be on the place of the ECB. Believe me, it's going to be a very tough decision, and they will have to find the balance to keep economy as intact as much as they can. So let's transition to a dollar index. So as I said, I'm not going to pursue in this situation, and it will be very unwise of me to hold off to one wave count, which tells us that the dollar will go lower. I was looking for the dollar lower following this 5-wave move downs, looking this as a correction. This wave count still stands. We are backing off of the 786 retracement, but the current events, we need to be flexible. We need to take into account the current macro environment, and that's why I do this macro with not just with cryptos but with the other assets classes, because you have to adjust these two views. And for now, it has been functioning very good for the last 2 years. We have been on top of many intermediary and higher time frame highs and lows on Bitcoin, looking as well, and coupling this macro environment with the moves in cryptos. So I will go for a triangle as well. If you see here a small overlap, that's completely fine. If you have a triangle, actually the E wave has to overlap, so we can say that this is not correct according to the rules of the Elliott wave. So in this respect, this overlap is completely fine. If you count this as an A, B, C, D, and E, E will actually complete here around 98 to 96. Any drop below will force me to change this wave count to be more bearish. So I will keep and switch between these two wave counts because dollar is still a reserve currency. We are seeing what is going on in the front of Russia asking for oil and gas to be paid in ruble, and also wheat and other commodities, which will of course change the balance of the dollar as a world reserve currency. As we know through the history, the reserve currencies don't go away so quickly. So even if that is here in the question, it will take years actually to see dollar to be used to a less extent than usual, and maybe some new geopolitical or overall solution in regards of the either a basket of reserve currencies or some other solution. So I don't think that dollar is still doomed. There will be years of dollar flows in front of us. So and as well in this situation when dollar is actually having still a safe haven status, we don't know how this war and when it's going to finish. So I will like to stay slightly also with the option of a temporary bullishness, which will be detrimental for the world economy because the EEM markets are very exposed to the debts in dollars. And if we see some disturbance in that respect, higher dollar will also have an effect on these companies functioning in the EM market. Also we have the offshore dollar markets, which can also sustain some stress. So in that respect, dollar might also be in the situation to continue further higher, and I don't want to be on the so bluntly on the short dollar side, on the downside. I'm going to show you also a chart of oil. This is the chart also going from 1862, so it's a very big chart on oil. Oil is a very important factor in all of the macro things because energy is behind the economy, as you know. So if we look and put this into perspective of the Elliott wave, wave counts, you can see that it's not very difficult to count some type of a 5-wave sequence here. You can see a wave 1 and 2, and then nice subdivision in a 1, 2, up in 3, 4, and 5, up to 2008. Then we have saw a very big crash, of course, in the financial crisis, recovery, crash again, and of course, you know that we had on futures even a minus readings on oil last in 2020 in May. But from there we recovered. This is the Brent chart. I have excluded these negative futures charts because this is the spot chart. So I do see here that oil has more room on the upside. As you know, I have shown you the chart of oil reaching 137 when we were actually trading around 98. So we have reached that levels. We are trading now at close to 107, 110, a small pullback. I will just go a little bit closer to explain you this potential consolidation and even continuation of oil on the upside. We have tested the upper level, not just for a small bit we missed it, but you can consider this to be a test. But if you count this as a 5-wave move, you will find some irregularities in a sense of how the wave 3 actually was unfolded. It is still not the shortest wave in the sequence, but I can easily imagine this extend further on the upside, reaching new highs. So I will start to continue to monitor this potential even new high in front of us in oil, small correction and then further continuation. This is going still to be my hypothesis in the current environment until I don't see a clear 5 waves down, testing 67, 68 again. In this current situation, we will need to see recession, and that a very hard recession coming to see these prices in oil back down. Since we have looked for the yield curve, stock market is still trading on the upside. This might be a consolidation, or it also might be just a retracement. We will see that. So in according to that, we will also track this oil wave count, which is very important for the global markets. So let's switch to cryptos. As you know, I'm going to show you always this total crypto market cap chart. It's behaving as we were looking for already a couple of months, even I would say year. We are still trading in a very sideways manner. We consider this to be a wave 1 and 2, up in 3, consolidation in 4. For now, this consolidation have characteristics of a triangle. We are still basically trading sideways. We are looking for a little bit more upside, which I will explain on the Bitcoin chart. Why I would like to see this total crypto market cap going further higher with the Bitcoin chart, and there is specific reason for it. I will go more into depth of that looking at the Bitcoin chart. We are holding 23.6%. Usually when we want to measure where the wave 4 can actually retrace, we do have a fib retracement ratio which goes from the beginning of the wave 2 to the end of the wave 3, and we get these ratios and actually basically support levels. We didn't cross 23%. We did a little bit on wave A, but that's normal. But usually when you have triangles, you are not going to see price going below this 23%. And as you can see, since we have been traded further from 2021 June, July, we didn't cross 23%. So we have also traded in 3 waves on the upside and on the downside for now. So there is all of the signs that we can say that we see on the chart that this actually qualifies most likely to be a triangle, which is just a balance of forces between the bulls and bears, which usually result in the resumption of the previous trend. So the previous trend was on the upside, okay, as we can see. So this pause or a correction is just going to balance the forces until we see the further and the last move in this cycle on the upside when this correction actually is finished. So I am going to, of course, follow that in this manner until we trade above this 23%, and there is no need for us to change it for now. We still view this as a triangle with the resolution up higher in the couple of weeks to come. This may be May or June or even July. So sometimes these legs in triangle can take time, and we might have a couple of weeks more, okay, until we see some potential signs that actually this triangle is finished and we continue higher actually to a new high in a total crypto market cap. So this chart also goes very well with the Bitcoin chart, as you know, because the Bitcoin is still a leader in the crypto space. So I'm going to show you the higher time frame chart that we are looking in a Bitcoin. So in general, this is the chart from 2010. I have to squeeze it a little bit because this is a weekly chart, but it doesn't have much space. So you can see it. With all bits and pieces. I will just show you and explain you the reason behind it, and then I will go into small details. So we do see this as a wave 3 intermediary developments on the upside. I'm still not going to talk in regards of the targets for the possible fifth wave. When we see a confirmation of this consolidation, I have a couple of ratios which might give us a clue where the Bitcoin will move on the upside. We still do consider this as a fifth wave, so we need one more leg on the upside, and then we are looking for a larger consolidation in some pattern, either a triangle or a complex as here, but on the higher degree that Bitcoin is going through before we continue higher. But that's very far away in regards of the years to come. So I'm going to focus more, as I did in the previous Crypto Labs, on this 5-wave sequence, which is still unfinished as we see. So if we go and have a closer look from the 2019 January lows, or let's say 2018 and December lows, we have identified 5-wave move, a sharp ABC correction, and then we have identified also in March 2021 potential highs here, while the market was pretty much bullish on a Bitcoin. Almost 99% of the market was on the bullish side. We have seen some of the fib levels there, and we said, okay, we have to look this objectively, and we were right in that respect, because the sentiment, which I always mention is very important one, has been blinding the people for the higher prices to continue. We have been going through the very timely consolidation period, which also agrees with our suggestion that this is most likely a triangle, because even if you look the Bitcoin retracement levels, we are holding 23.6% retracement, which for now is the pattern which describes that will be best to look as a triangle. So if we go below 30K, of course, we'll have to change it. This is the worst case scenario, and that is a 22-25K test. Where is this 200 moving average? Where is the 38% retracement? And there is also a couple of other things there, as you can see. But I will not talk about that until we break some key levels that we actually was just talked about, and one of them is this 23% ratio, which comes around 30, 31, 29K. Okay, so even if we go further and enlarge this picture in a Bitcoin, we are looking this to be a possible D wave on the upside. Legs can be complex in triangles. Usually one or two legs are complex in triangle. Flats can be in triangle as a part of a triangle. I get many questions in regards of that. So we do see this as a flat in A, up in B, down in C. Potentially this is a D wave. And as you can see here, we have something which all of the market participants is looking. On daily, this is the 200 moving average. Okay. We touched that and we are retracing lower now. So what I would like to see, that this is just to be a correction, because the usual legs relation at least has to be a 0.618 relation of the previous legs. So this comes around 56K. So I would really like to see Bitcoin just correcting here a little bit and go further on the upside to test this 52 to 56K, because this will offer to me an additional confirmation that actually this is a three-wave move on the upside in a D wave, and then E wave will develop in a couple of weeks, which I think is going to stay at 40K, which has been proven to be a very solid place for this E wave completion or a fourth wave completion. And then we should see signs on the Bitcoin of the impulsive move up on the upside, which will be a confirmation and reversal signature for the further expansion. Okay, so how we approach that in trading analysis, we do wait usually for these longer term trades, a small confirmation. But as I said, I'm going to, if I see these developments, definitely I will put some capital to work here on the 40K, and then I will increase my exposure as I see a confirmation on the upside. So for now, we are going to keep this this outlook that we are in triangle. I would not like to see, which will actually makes me to change some things here, that Bitcoin goes down below 40K and testing these lower levels. So that will actually just make me change some of the relation in the legs in the triangle. But for now, as I said, I will be much more happier with Bitcoin reaching 52 to 56K, because that will be a nice confirmation that this is actually a D wave, 3 waves down in E wave, and then off we go. We're going to see 5 waves up, trading above 60K or even 65, small pullback, and then a continuation further towards 100K and above. So this is our current outlook that we track for many weeks. For now, it works. If you ask me about the scenario, which is as many is kind of looking as a worst case scenario, you can make a case that this might be a complex correction, in a sense that there is a part of legs which you can count as a very complex corrective pullbacks. This will be a flat in 3 waves down in flat for W, X, and then you will have a simple A up in B down in C towards 20 to 25K, breaking all of these levels which I have told you. So I don't think flat is anymore in kind of the options here, because it doesn't look anymore like a 5 waves down in flat. So if you have anything moving on the downside sharply, this will be most likely a C wave of the Y wave, which will make this a very complex correction in the Elliott wave world. So pretty much same picture on Ethereum. So if you look the overall chart, I still think it is a triangle. As we are looking at in Bitcoin, we also testing and back off of the 200 moving average on daily, as you can see here. So I also would like to see Ether starts to climb a bit more, so that this to be a correction. I would like to see Ether trading around 3,800 and 4,100 to confirm the D wave, and then the same as Bitcoin E wave, and then a further move on the upside. So if you look the overall chart, we still see this as same as a Bitcoin as a consolidation. In a case we go below some of the crucial levels, actually I'm afraid the downside levels where the weekly 200 moving average comes around 1,200, but I'm not the guy who is going to go with this very sensational kind of predictions. I'm trying to look this step by step so we don't fall into a sentiment blindness, to be actually blinded by the moves. So if we looked at it objectively from the point of higher time frames, we are still trading sideways on Ether, as you can see. And for now, this wave count works, and we're gonna keep it until we see some of the major levels has been broken, and that we need to change our view. So I don't like to give a million wave counts. So I mean, you can do at least 5 different types of things that can happen here. I'd like to kind of filter that out with a little bit help of a macro and small details in these patterns. So I will most likely give you 1 or 2 options which I think it's more probable, with the clear levels of invalidation when we are going to need to change our outlook. So for now, I'm still going to look this as a triangle, a little bit more on the upside, preferably. I would like, as I said, Ether to see 3 or 4,000, 3,700, 4,000, a pullback and then a confirmation. So I also have some targets on the upside in Ether, which I will show you how do we do a clustering of the fib levels, where is most likely can be a reversal price when we reach some upper levels in the months to come in the next crypto labs. So I'm going to show you one more chart. I have been talking about that pretty much in the last crypto labs. I've been pointing out to members as well, and also to you here, that Aave is testing some of the levels which are crucial. So I will like to go technical in this chart of Aave before I go to your comments and requests. From the highs in Aave, we look this as some type of fourth wave, okay? So we do identify this as a 3 waves down in W, a very complex X wave. So this is a complex zigzag to the downside. Usually you're going to have 3 legs in all of them. Intermediary triangle can appear either to be all of the X wave or intermediary B wave. Then sometimes that's why Elliott is sometimes difficult, because you need to have a good eye and experience to recognize that. So I do count this as an A triangle B up in C for X, and then I count this as an A up in B down in C. We have reached almost to the PIP, some of the FIB lower and higher time frame ratios of equality measured move and the relation between A and B to the downside. We are trading almost 100% higher in Aave from there, but I will need to see a little bit more on Aave further to count this as a 5-wave move, and then a pullback might be very interesting for the further move on the upside. Of course, I would like Aave to continue this upper trend. I would not like to see move below this, because in that case I will have to change wave count, but so far so good. We have flagged this to our members and to you much before it happened, but we still need the confirmation. I'm not going to go that Aave is bullish yet. I would like to see more developments on the upside, and then I can say, guys, there is a big probability pullback is going to be a good chance for a longer term hold. But I just wanted to present you here. Sometimes these fib levels works pretty nicely, and you can see a sizable, at least a sizable bounce or a development of a new uptrend when you see this nice level of clustering in Fibonacci ratios when you combine them with measurements and Elliott wave analysis of the correction. So definitely technically very nice event. So let me, guys, look your comments and your requests. So we're going to, of course, look some of the other cryptos. Usual Schnitzel greets me on Serbian. Hi Schnitzel, dobro sam Schnitzel. Zach Dent, hi Alex, Yuan, hi Yuan, Lawrence, hey, good to see you too. Oleg, hello Oleg. Felix, long commodities. Well, that has not been such a difficult thing, considering what is going on. Can you check XRP? Would you like to buy XMA? I don't know if that is XLM or XMEA. I don't know what is that. Can you clarify that for me? I'm not sure I understood that. Or are you saying that you would like to see it go to 55K and back down to 30K before it? No, I didn't say that. I've been very clear. Usually I try to be precise. On the Bitcoin, because of the nature of the legs, maybe it can be a little bit advanced if you're not versed in Elliott wave, but we usually like to see some proportion between these legs, and I would like Bitcoin to go a little bit further to reach this zone, which then will much more qualify this correction as a D wave. I'm not expecting 32K. I expect a test of 40K. If I see that test in 3 waves, 40K will be a final bottom for me. Any move on the downside, I will have to change outlook. So I'm usually precise in what I'm saying. So 40K for me is, I would like to see more upside to qualify this, and then 40K test, and then further move on the upside. So that will be my outlook currently. Jamestown, hi Alex, hope you are well. I'm well, thank you. A question: is the bottom of the channel of the importance for the triangle turning point? Yeah, you can see sometimes this coincide. As you can see, this channel on the upside, you can draw a couple of channels. There is a base channel, there is an acceleration channel. So you can also have the overall channel, which will actually connect some of the spots. Channels are relatively subjective. They do work, but you need to know how to put them correctly. And there is a debate ongoing in that always, but we use channel as a secondary information. We focus mostly to combine macro and Elliott wave count, the environment, which I think is the most important for some asset class. And also we are looking the monetary conditions. We are also looking the Elliott wave count, some Fibonacci retracements, and then secondary we look the small details of the patterns and channels and time. So if we go here and look the time ratios between the time spent in the secondary correction or a second wave, usually this time are equal, or the fourth waves, or a balancing act as we call it, can be prolonged, as in here in this case. So 1618 and equality can be some of the clues. Equality happened on November 7, 2021, and 1618 is going to happen on April 24th. I think that's a little bit close, so rarely you're going to get exact time because this is a weekly chart, so it might deviate back and forth. So in that case, I will more go for May, 20th May and June. If this goes like I'm looking it's going to go, then I think most likely these lows might be around from May 15, May 20th to the June, beginning of June 10th of June. Okay. And also that will coincide with this channel. Okay. Channel lows, but you will not get that from the 40K. It will need to go down back to 30K to get a matching with the channel. But it's pretty much contained in this range, as you can see. So you can say that from that perspective also, some of the parallel lines here can coincide with this angle in the channel. Okay. Yeah, I have posted the chart of Zilliqa. Zilliqa has been going further on the upside. We did look Zilliqa to be in a fourth wave. I will show you the chart that we were looking in Zilliqa. I think it's here. I'm going to glare this for you so you can see it further. We do think that this is just potentially a first leg. If you look what has been going on, relatively not so difficult in that respect. You have a wave 1 and 2, up in 3, 4, and 5. We don't have a wave count invalidation. There has been ongoing discussion if this can be counted as a wave 2. It can, but it really doesn't matter in this instance. So what you're going to see from this sharp move in almost 5 waves on the upside, if this doesn't, of course, go immediately higher around 0, 8, or 1, usually you will see a sharp test of the previous swing highs, which we did see, and even a little bit more above. It is natural to look for a small pullback in a second wave, in 3 waves, and then a possible continuation on the upside. This is clearly a nice breakout in 5 waves. So far, the move down is in 3 waves, as you can see, and this is actually 80% probability that after a pullback, Zilliqa will continue further on the upside, looking this wave structure. So for Zilliqa, it is going relatively well in the possible future developments. If you see some type of a pullback back to this 0.1, which might be next support levels. I don't think we're going to reach extreme. Usually when you have this outbreak on the upside, you can also get a sharp retest of this channel, of the corrective channel, but I don't think we're going to go there. I will go a little bit more on the upside, 0.11, 0.15, and then possible developments further on the upside in Zilliqa for the continuation of this fifth wave on the upside. I apologize. I don't know what's going on with the video. and I don't know why it's lagging. I've checked that on my computer, everything is fine. I will get the guys again to see what is wrong. The last video was also lagging. I apologize. I think it's a YouTube thing, but I will check it out again this time. So I apologize for that. I have cleaned also the space on my computer, so I have a relatively powerful computer, so I don't think it's on my end. So I will check that out. I don't know. I will not go for that assessment. This head and shoulder story. I don't know, guys. I'm not a fan of head and shoulder story, so definitely you can make the case. But I have seen many heads and shoulder failing. So first, you have a couple of things. I mean, you can people can make a case this is some type of a head and shoulder. But of course, you need to see even more upside. Like, of course, I don't even like this curved drawing. When you have a head and shoulder, most likely you would like to see something like this. And even in that case, I don't think that's viable. Maybe I'm not an expert on head and shoulder. I think you will even have to go more on the upside. And then you might get just a retracement in a fourth wave and then a consolidation on the upside. And then people will say the head and shoulder pattern failed. I mean, I don't know. I'm not tracking head and shoulders. Anyhow, they're the part of the Elliott wave pattern. I've shown that on many webinars. So I'm not confident that this is head and shoulder, especially what you're going to do if you believe this is head and shoulder and Bitcoin goes further to 100K. I mean, there is nothing to it believing in the patterns. You need to see a confirmation. I don't believe in anything what I'm presenting to you here. Either to my members, I said that all the time. I'm looking for the clues, partial confirmation, and the very small details which can give me the probability. But surely I'm going to say to you, I don't believe it until I see it. So, of course, the longer term entries, you need to have the perspective, and I do. So as I said, 40K in this case will be my first entries, not just in Bitcoin, in some other cryptos, but in general, I don't believe any of a pattern until I see some signs or a partial confirmation or a details. If you spend 10, 15 years in the Elliott wave, you should recognize some of the signs that the chart is giving you, and also the environment for the possible pattern confirmation. So I will greatly advise you, don't believe into anything. Okay, you can have technical skills, head and shoulders, whatever you follow, whatever type of technical analysis, just focus on a confirmation that or a clues that actual pattern is unfolding. Otherwise, I will not trust it. And either with this your observation that this is head and shoulder, I don't think so. Okay. Okay, guys. So let me AVAX. Okay, let's see that one and what's going on there. Avalanche. I think that it was pretty much lagging. I looked the chart. The pattern is unfolding nicely, but I don't like the slope of it yet. I do expect further expansion on the upside, and for now, Avalanche doesn't give us much material. As you can see from our support line, we have been going on the upside, and that's fine. But as I said, whenever I see a three-wave pattern, I don't have much trust in it. I need to see a five-wave move up above this channel, testing 129. I will allow a small pullback down to this 80 level, okay, as a correction. But then from there, I want to see signs that Avalanche will start to move further on the upside. Otherwise, these two levels might be tested again, as you can see. Okay, so you can also make the case this is just a head and shoulder. There is a left shoulder, right shoulder, and then a break of the neck will go give you the usual target down to 32. I don't think that will happen. I would most likely go for this scenario. Okay. Litecoin chart, yeah, sure, we can do that. Let me just pull up the Litecoin chart. I think we are looking for some type of a nice. Hey guys, sorry, I didn't look gold and silver. Let me just do that quickly. So as I said before, I'm not convinced in the breakout in gold. This can be still be 1-2 on the upside, but I want to see. Gold has been very lethargic in this type of crisis. I said before, gold should be at 2.5, 3,000 now, and it didn't budge. It just did $200, tested the previous highs, and then moved lower. So as I said on the last time, this can be some type of a prolonged pullback with a testing or already tested 1,900. If we go further lower, below 1,850, I will go for much lower level in gold, either in flat, so this will be a 335, or it will be a complex correction testing 1,600 to 1,650 on the downside for the fourth wave. So I don't have for now any trust since the gold didn't made a sharp breakout on the upside in the further gold moving on the upside, especially if we break the level we mentioned. The same thing on silver. Okay, so silver has been behaving also without any confirmation on the upside. We are seeing a very lethargic price action on this trend line with a tendency to go even further lower. So we don't see a qualification here or any qualification that we are going to break on the upside. Okay, so I'm gonna follow, of course, that, but for now, as the thing stands, I will be more leaning towards the lower levels in silver and gold. So let me go back on the charts. Litecoin. Let me just go and see Litecoin. I think it's here. So let me find the chart. Overall, I think I've been bullish on the Litecoin in regards of the overall ABC or WXY pullback. Depends how you count this. Some of the levels I had was before at 76. We reached this spike, reached 91. So is this a reversal? We still don't have a confirmation level. We didn't even test the 200 moving average. So what I would like to see on Litecoin is definitely we do develop higher, and then the pullback will be some type of thing which I would like to see. For now, you can look this only as a three-way move, and then we can test even lower levels as well as on the others, as I said. So I don't see a confirmation from the lows. The most biggest and closest confirmation is on Aave, but still there you don't see 5 waves. So guys, this is great, a very nice development, but I cannot still say that actually Litecoin is eligible, that is going to continue further on the upside, I mean longer term, okay? So I want more from it. If I see 5 waves up in some type of leading diagonal or anything else, definitely I will be ready to test some of the levels and maybe put some small capital on it and then increase it as it goes further higher. So as I said, always do a step-by-step risk management and increase of your convictions as the pattern evolves and develops. I don't know what is ENG, natural gas. Giga Babnik say, hey Alex, can you check link, Phil? Okay, let's look Chili's. I think Chili's is in a fourth wave. I have been tracking that for one of the members. Yeah, Chili's is, we have been looking this as either three-way move or a triangle in Chili's. So I think Chili's looks good for now. As you can see, the overall chart, it still can kind of a circle back in some type, but this looks like a 3-wave. And as I said, we still don't see a 5-wave move on the upside. What I want to see in Chilis is 1, 2 up in 3, 4, and 5, testing these levels, and then I will say there is a big probability we can anchor this wave 4, and then we are in the first leg of the 5th wave on the upside, which is relatively easy to see. I will count it from here. Even if you do this and starts to count in some type of a larger flat, this will be a 4th wave and a consolidation on the upside. So I do think Chilis is showing a strength. We have reached some of the levels for a possible equality. We missed that a bit, but that's not so horrible. But on the upside, only 3 waves. I want to see more on Chilis. I want to see a 5-wave move, and then pullback will definitely be interesting for the continuation on the upside. And you can do a small trick, guys. You can always put some type of a upper trend line, which is basically every correlation tend to be in a 3-wave structure, either except the triangle, of course. In the corrective channels, also you can consider even a triangle to be in a channel, because triangles are usually has the 2 lines, which kind of goes from lower, higher lows and lower highs converging. Okay, so you can also consider that to be a channel. So what I would like to see a test of 0.44 in a 5 waves, and a pullback will be very interesting for Chilis for a continuation further on the upside. Yeah, BTC is dumping today. I have explained that we are testing 200 moving average. Of course, since all the markets are looking 200 moving, all participants, everybody want to be on top of that. So as you can see, daily chart, of course, everybody's shorting on 200 moving average exactly in anticipation that market maybe fail in 200 moving average. So let's see. That's a kind of a common thing. You can expect that, because everybody who trades professionally or even has a couple of years knows that 200 moving average, almost 80% of participants are looking what it's going to be on 200 moving average. So that's completely normal. ING, I think maybe you think on engine coin. I don't know what is ING. I will look for that if that exists. Oh, so injective protocol, okay. Yeah, this looks like a Kusama chart. Definitely 5 waves up in a wave 1. This looks like a 5-wave move. So looks very nice. I don't like to be too optimistic. I usually put this as an AB. So I will do the same. So there is a 5 waves up in A, maybe an ABC pullback, finished or still has a little bit more room to the downside, but definitely that should be a last leg to complete this correction. That's not so difficult to analyze. You can also do, let me just glare that for you. You can also do also this parallel channel here, and this might be also a triangle with one more dump, but definitely if you see some type of a continuation above this upper trend line, especially in 5 waves, that will mean actually that this one will qualify for the continuation on the upside, and that upside might be pretty large in development. Okay, so I cannot confirm that this correction is over. Definitely, I think this is the first impulsive wave in a wave 1 or A. I do look this as a corrective pullback. I cannot say specifically if this correction is over, because I don't see a confirmation out of the corrective channel. But even if we go a little bit more on downside, that will be my key levels and the confirmation further on the upside. I do think this is just a 3-wave move, which we label as an ABC in the Elliott wave, which means that this is a corrective and that we do expect a further expansion on the upside. So I will say for now, as we look this 3-wave structure, this chart is very bullish for the future. Of course, we will wait for a confirmation on that, but it's a nice looking chart for now, even with a little bit more downside. Okay, guys, so thank you very much. Sorry on the delay. We have moved the stream 3 hours forward. Click the like button, subscribe. Of course, you know the drill in regards of the YouTube, blah blah blah, all of that stuff. We have going to continue. We are going to continue to view cryptos still in a consolidation, as I said, with the increased probability with the latest events that we can confirm a triangle, test of 40K, and then zoom our road up to 100K. That's our primary view now. It can change. So for now, we are thinking that pattern is giving us at least 50-60% chances that one of the our favorite scenario might be very close to the end and developments on the upside. Of course, we will update you on that in the next Crypto Labs. Tradinganalysis.com. If you want to test our crypto service, you're welcome. We have extensive members webinars. We do charts for every crypto you have or you're interested in. As a member, we also have a nice community in Discord. And we have been on crypto markets for 5 years already. So I wish you well rest of the week and see you next week, guys. Bye bye.